Jai Hind everyone. Welcome to my YouTube channel which is Explore Yourself, Banking and General Knowledge, etc. Today I am talking about Budget 2026, Tax on Disability Pension and its impact on soldiers who serve till retirement age. Introduction. For decades, disability pensions for Indian soldiers has been treated as a mark of national gratitude and remain fully tax exempt. However, Budget 2026 introduces a significant policy shift by proposing taxation on disability pensions for personnel who continued service despite disability and retired normally, sparking widespread debate on fairness, moral, and recognition of military sacrifice. For more than a century, disability pension for Indian soldiers has symbolized the nation's gratitude toward those who were injured or disabled while serving in uniform. Since 1922, such pensions enjoyed complete income tax exemption, recognizing that these payments were not ordinary retirement benefits but compensations for physical sacrifice made in the line of duty. However, Budget 2026 marks a significant and controversial shift in this long-standing policy. From 1st April 2026, financial year 2026-2027, the government proposes to impose income tax on disability pension for soldiers who continued in service despite their disability and retired normally. This change does not affect all beneficiaries uniformly. Instead, it introduces a clear distinction based on how and when a soldier exits service. To understand the impact, it is important to first understand what a disability pension is. A disability pension is paid to soldiers who suffer injuries or disabilities attributable to or aggravated by military service. It consists of two components. The first is the service element, which is linked to the length of service rendered, similar to a regular pension. The second is the disability element, which depends on the percentage of disability assessed by a medical board. Higher disability results in a higher pension amount. Together, these components ensure financial security for injured personnel. Historically, all disability pensions, regardless of circumstances, were fully tax-free. In 2019, the government attempted to withdraw this exemption, but the move was challenged, and in 2021, the Supreme Court blocked the withdrawal, reaffirming tax exemptions for disability pensions. Budget 2026, however, introduces a more nuanced approach rather than a blanket removal. Under the new proposal, tax exemption will continue for personnel who are invalided out of service due to disability, meaning those who were forced to leave the armed forces because they could not no longer serve. However, tax exemptions will be removed for soldiers who, despite being disabled, continued to serve and eventually retired through the normal retirement process. In their case, the disability pension, particularly the service linked portion, will now be taxable. This differentiation has sparked sharp criticism. Many argue that the policy is unfair and discriminatory, as it penalizes soldiers who showed resilience and commitment by continuing to serve despite injury. Critics say it creates unequal treatment among equally disabled veterans, undermines soldier morale, and sends a traveling message that perseverance and continued service may result in financial disadvantage later in life. In essence, Budget 2026 does not eliminate tax exemptions for disability pensions entirely, but it redraws the boundary of eligibility. The debate now centers not just on taxation but on values, how the nation chooses to recognize sacrifice, courage, and continued service in uniform. In conclusions, the proposed taxation of disability pensions under Budget 2026 marks a critical departure from a century-old practice of unconditional recognitions for injured soldiers. While the government has retained tax relief for those invalidated out of service, the new distinction raises concerns about equity, moral, and the message it sends to personnel who continued serving despite disability. The policy has therefore ignited an important national conversation on balancing fiscal measures with the principles of fairness, gratitude, and respect for military sacrifice. Disclaimer: this article is intended for general informational and awareness purposes only. The content is based on publicly available information and interpretations of Budget 2026 provisions and does not constitute legal, financial, or tax advice. Readers are advised to refer to official government notifications, consult qualified professionals, or seek guidance from competent authorities for accurate and up-to-date information. Thank you very much for your patience. Request to like, subscribe, and share.